I'll make one prediction. I think the cycle breaks.
It's a 4-year cycle.
I think this is the cycle that breaks the 4-year cycle. I've never said that before.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show.
Jaime, thank you so much for joining me today. Super excited to chat with you. All right, Jaime, you're the CEO of ReserveOne. ReserveOne is a digital asset treasury company offering investors diversified and active exposure to the digital asset market. Previously, you were at Bell, BlackBerry, National Bank of Canada, the CEO of Hut 8, and a multitude of other great businesses. All right, so take me back to BlackBerry. So I used to be obsessed with BlackBerry. When my stepfather first got a BlackBerry, I was like astonished by the tech. I was like, this is insane. It's incredible. It was like, I would say like the Apple of the day. So tell me about your time there.
Yes, it ended up getting dominated by Apple from a handset perspective. You're cutting right to the middle of my journey, which I've actually never started at before. But I love that you're excited about BlackBerry, because really I went to BlackBerry because I was obsessed with saving the keyboard because I was worried that Apple would take over and we would just have all glass rectangle options. And I loved my keyboard and I really wanted to keep it. And at the time, BlackBerry had just got a new CEO. John Chen had gone in to try to turn the company around. It had, really struggled, and the stock price wasn't performing well. John was kind of the turnaround guru of tech at the time. And I had stumbled into doing business unit transformations when I was at Bell, which was where I was before I went to BlackBerry. So I had done 3 business unit transformations at Bell. Then I had the opportunity to meet some of the leadership team, John and a few others at BlackBerry, and they asked if I would be interested in coming over. And so for me, who had kind of just found my groove in this world of transformation, the opportunity to watch John come in and try to save this company that I was so passionate about, Canadians were so passionate about, it was just too good not to do. So I spent about 2.5 years at BlackBerry running the Americas, mostly up for the handset side. We ranged the first Android operating system with BlackBerry, and that was kind of our attempt to try to revitalize and save the handset division by having an open operating system. But unfortunately, it was just too late. BlackBerry had done 2 operating system turnovers in the prior 5 years, and customers just weren't up for another change. Returns were too high. And so ultimately they chose to license the business off and move entirely into software.
Wow.
But that was a fascinating 2.5 years. Really learned a ton and kind of reinforced that passion in me to keep doing this route of transformation. And that's really where the rest of my career has been spent.
So cool. Okay. So what was the thought process moving on to Hut 8? Because that's a crypto company and you had a very great career in traditional tech. So why, and like back then, I think it was 2020 when you moved to Hut 8.
Yep.
It was not very popular, like definitely not popular at all.
No.
So why'd you decide to like do that to yourself?
When I find an opportunity that I really think I can make an impact, I can't say no. And that one, I spent a long time analyzing that. Hut had almost gone bankrupt in the Bitcoin crash of COVID, that spring of 2020. I had spent, as you mentioned, a lot of my career in and around the data center space, and a Bitcoin mine has a lot of similarities with a traditional data center. It's almost like coming at the same problem from completely opposite directions. But operationally, I kind of understood the infrastructure. I'd already done a number of transformations at that time. I had gone down the Bitcoin rabbit hole in 2017 after doing a stint within the capital markets industry, and really just kind of looking around and trying to see what tech was out there that could act as a forcing function to bring change to that industry as a whole. And that's when I found Bitcoin. Don Tapscott around that time wrote a book called The Blockchain Revolution, and that was kind of the beginning of a passion project for me. Around that time, I also went over to be the general manager of Cogeco Pier 1, which is of Canada and APAC for Cogeco Pier 1. That was a data center company. And in that bull market of 17, 18, all of a sudden, out of nowhere, we start getting this mass amount of inbound demand from people we had never heard of, trying to take down like hundreds of kilowatts, in some cases megawatts or multi-megawatts of space. And so that was my first exposure to Bitcoin mining, was seeing them try to come into the data center, understanding how the technologies like did not play nicely together. It really, they're not compatible within the same environment. And then of course, what happened next, a lot of those, almost all of them, went bankrupt a few months later when the market turned. And then any data center operator that had taken in some of these clients is then stuck with these ASICs, often on bread racks. So I kind of was familiar about mining from that experience. And then when the board called and told me what the challenges with Hut were, where they wanted to take it. I saw the opportunity. It was small. Maybe it was only trading in Canada, maybe 100 million market cap, not a lot of liquidity, super, super small team, lots of challenges in and around the business. And I took it over in December of 2020. I think I was announced in November. I think I started in December, and then had a really exciting 3.5-year journey growing that company out.
So you brought it from TSX to NASDAQ, right, in 21?
Yeah, we were the first Canadian public miner to dual list onto NASDAQ, which it was a race. That was such a wild time because Hive, us, Bitfarms, we were all trying to be first to get over. But of course, you're in a quiet period. No one is talking about where they are. So we all knew we were doing it, but we had no way to know who was going to be first. And we ended up being first by a few days, and all three of us got out, I think, within a month. But yeah, we were the first, and just really, really successful move to get us to the NASDAQ, to increase liquidity, just access to bigger markets. And then we were able to raise capital and start driving a diversification program. We were also had Bitcoin on balance sheet before strategy, which is a little known fact. And then in January of 21, we were the first miner to say we're not selling our Bitcoin. We're gonna hodl. So that was kind of my first dalliance with Treasury, really. And so we built our Bitcoin stack, consistently from that point forward. And then just started diversifying the business January of 23, when we did the first pivot into data centers. We purchased a publicly traded company called TerraGo, and that was an active data center business, colocation, some GPU cloud business, and so kind of kicked off that trend. And then later on that year, I think it was, we purchased some power plants, and so vertically integrated straight to generation. And then we ultimately decided we needed to look for an opportunity to pick up U.S. assets, because we'd been entirely Canadian at that time. And we were meeting the requirements to get into the U.S. indices, but couldn't do it as a foreign issuer. So ultimately, we entered into the merger with USBTC, as well as on the back of that, re-domiciling the company from Canadian headquartered to being headquartered in the U.S. and the majority of the team out of Miami, which all happened. That was December of, I guess, 23. And then I stepped down in Feb of 24.
Very active few years. That's crazy.
Yeah, it was crazy.
So were there regulatory pressures during that period of time? Because I do remember that there is this rush of blockchain, Bitcoin mining companies that are publicly traded. And I was so excited for that, because I was like, wow, kind of the administration previously did not really like crypto at all. And so to see that, I was like, oh, there's hope. This is great news. Were you facing pressures from regulatory perspective, or they kind of left you alone?
In the early years, not so much, but it was under Gensler that we were trying to get through the re-domicile and the approval of the merger, and that was a really long, arduous process. As you know, that was right in the middle of Operation Choke Point. Around that period, there was lots of debanking activities happening for the space. So yeah, never ever a dull moment in crypto. Those were very early years too, with respect to getting auditors, keeping auditors, getting D&O insurance at reasonable prices, like finding good professional counterparties that were even willing to work and support this space was a challenge. Very, very different environment now versus what we saw 5 years ago.
Yeah, you said D&O insurance at a reasonable rate.
At a reasonable rate.
Like, because back in the day,
Yeah.
we could get D&O, and it'd like this is crazy.
Yeah.
So
just wild.
Yeah. Why do you think that we're seeing this trend of these Bitcoin miners acquire, and you were early to that, acquire Bitcoin or other digital assets, primarily Bitcoin, we'll call it, and go towards HPC versus just pure ASIC Bitcoin mining? Is Bitcoin mining as a pure activity, is that in trouble, or is that just like the normal evolution, or is it just like not a very good business?
It's a highly capital intensive business. It's very, very volatile, and the capital markets don't reward it from a multiple perspective. So I think one of the big drivers of diversifying into HPC is really the market values HPC businesses at 20 plus times the multiple they value a Bitcoin mining business. And that matters when it comes to getting low cost of capital formation, and it's important to shareholders. So that's really, I think, one of the primary drivers of that diversification happening so widely. But also, while most of them are keeping the Bitcoin stack to have a good source of capital that maintains optionality, because now there are many, many more options to do lending against your stack. We were actually the first miner at Hut to enter into a lending agreement with Coinbase against using our Bitcoin as collateral. Which is actually how I know Sebastian Bea, who's with me at ReserveOne as our chief investment officer, and had been at Coinbase, head of Coinbase Asset Management, and that's how we first got to know each other. So yeah, I think that's kind of two parts. I'm blessed. I sit on the board of Riot Platforms, and Riot's in the middle of that pivot right now. And I think it's just a really exciting time to kind of reimagine these businesses, and the market's ready for it. And I think Bitcoin mining needs to be used more strategically going forward. And I think we're going to see really interesting applications for the next number of years. I don't see Bitcoin mining going away from Bitcoin miners. I just think it's going to evolve.
Really quick on that, would you something like stabilization of grid, or like what do you imagine like that way?
Well, one of my favorite. So I do sit on the board of an oil and gas company in Alberta called New West Data, and they own and operate oil and gas wells. That's their primary source of revenue, is oil and gas. But they're able to buy wells below market because they're struggling to perform economically, and I won't get into the details. I couldn't do it anyway. But what they do is they bring in Bitcoin mining right to site, and they use carbon that would otherwise be flared or emitted.
Old Caruso model, kind of.
Yes, except they're actually oil and gas guys. So oil and gas is their primary source of revenue, followed by carbon credits, and then Bitcoin is the byproduct.
Very cool.
It's so rad. And so those kinds of applications where, it's negative cost energy, really. It's a byproduct. And I think we're going to see more and more just really, really interesting applications that are so good. They're good for the environment. They're good for the energy sector. They're good for our grid, for stabilization, for transition, for everything. And it's all private market funded.
It's great.
It's beautiful.
Perfect.
I know. And actually, on that point, even miners will be important, should be important for grid stabilization indefinitely, because they're the only intermittent load out there. Every other high performance computing data center is broadly a net taker. So they're always a drain on the grid, whereas Bitcoin miners can stabilize and turn on and off within a minute's notice. They can stabilize revenues, monetization, load balance. They almost act as a battery, kind of, but they're productive.
Very cool. All right, so you could have, there was many options for you. You could have gone in trad tech, more crypto, and within the crypto bucket, there's so many options for you. Why decide DAT? And when you were deciding DAT, what was the ideation on, okay, we're going to do a DAT, but we don't want to do a single asset DAT. We want to do something different. Like, take me through that ideation process of how do we build something better?
If you think about where I started, right? Hut, really an early treasury play. And the miners were the first public equity that served as a proxy for people to get exposure to Bitcoin, but through an equity format. So it was a way to kind of give easy crypto access, but it was that's a bit of a blunt instrument. And so when we were thinking about Reserve One, I always enjoyed the treasury side. I think there are a lot of increasingly interesting ways to think about yield and think about how to put those assets to work. Our thinking around how we constructed the company was, how do we take that giving investors access to crypto in an easy way to the next level? So it was really building out broader industry exposure, but still in a single equity. And kind of inspired by what we were seeing from the federal government between the strategic Bitcoin reserve and the digital asset stockpile. So they've talked about assets that they intend to maintain in the stockpile, in addition to a strategic Bitcoin reserve. So our model is 80% Bitcoin and then 20% digital assets representative of the stockpile, which is, as so far, what we believe will be in there: Ethereum, Solana, ADA, and XRP. As I mentioned, Sebastian is our chief investment officer, very, very well versed in this space. So the way we've set up the structuring is based on free float market cap with an ability to generate yield kind of override. So that gets the weightings such that the market kind of will take care of itself. So we're not actively rebalancing anything. And that puts ETH around 10, Solana around 7, ADA and XRP the balance.
What do you think about folks that say, DATs don't need to exist? We have ETFs. We have other I don't know, simpler instruments to get exposure to digital assets or buying the token directly. What do you have to say to the haters?
Look, haters are going to hate. You kind of have to block that out. ETFs are different. Mutual funds are different. Hedge funds are different. The way they interact with the leverage, the way they can generate yield. In our case, we also have the opportunity to allocate up to 10% of our AUM into high conviction venture opportunities, which you can't do in those other structures. And we have a seasoned, not to age myself and the rest of the team, but we have a seasoned management team, highly impressive, and board of directors as well, kind of supporting this vision. And so I think that's very, very different from any of those other products. And we're just excited to bring it to market, assuming we get through our regulatory approvals.
Which should be coming in Q1?
Difficult to say. The government is currently in shutdown, which extends to the SEC. So I cannot predict when everybody's going to go back to work. But I did hear this morning the longest prior shutdown, like the longest it's ever gone, is 35 days.
Okay.
So
hopefully we don't beat that.
Hopefully, yeah. If you want to go over under, please go under. Yes.
All right. So the 20%, it's 80% Bitcoin, 20% alts. Mm-hmm. The thought process behind that allocation was, okay, we want to have our core safe, quote unquote, base, safe within crypto. It's kind of like the index, if you will, be Bitcoin. And hopefully we'll outperform with this 20% allocation, or is it more the yield profile? Or what was the decision-making process to have that 20%?
A little bit of both, honestly. Typically, or you'll often see alts outperform at different points in the cycle. One of the things that I think will be interesting as we get regulatory clarity, hopefully coming with the Clarity Act, it should bring more of a halo to the alts that have been kind of just stuck waiting to figure out their market structure environment.
Are you looking at this 20% alt allocation? Is that going to be, if you're going to add or remove an asset from that, is that based on what the digital asset stockpile is doing, or can you make your own decision? Hey, we're going to add hype or whatever new coin that you want to.
So we have the flexibility. Initially, as I say, it'll be based on what we see from the stockpile as that strategy evolves. I would expect other tokens to be added within the stockpile, although we have no inside baseball. It's just my guess. 10 feels like a good number as opposed to 4, but who knows? So we would add and kind of adjust based on those adjustments made by the stockpile. But we do have obviously the ability for management intelligence as well.
What does that process look like to add or remove? Is there like an IC committee?
Yeah, we've got an IC committee. We're building out that structure and kind of cadence now, just in advance of hopefully getting through regulatory within the next few months here.
I talk a lot of smack about XRP. I think that they do an incredible job at marketing, and they've been very successful as Ripple is extremely successful. It's hard to knock them on that, but like Ethan Sol, I more understandable for me at least. What is the thought process on these assets? Is it more so, hey, they have the highest market cap and they have the widest audience, or what are you trying to optimize for? Is it just market cap, or is it audience, or is it a little bit of both?
Just the way we've done the weightings, again, based on free float market cap and ability to generate yield, they do fall into the lower weightings. I can't tell you why they were added to the digital asset stockpile, but Cardano and XRP have really, really, really engaged followers, engaged investor base, developers, active founders. So they continue to be a dominant force in the crypto industry, and frankly, good for them. We've built a structure that is actually bringing these communities together and encouraging cooperation and collaboration. As far as we're concerned, they're all part of our family. Which
good luck with that. That's going to be.
But I do think as the industry matures, we've actually matured quite a bit over the past few years. If you think about how we've engaged collectively in education, in trying to tackle and influence better legislation, better regulatory environments, both local, provincial, federal. We've definitely come a long way, and I think what's good for one project should be good for the industry. And what's the saying? Tide rises all boats. So I think that's the more kind of mature way to think about it. I'm not engaging in
on Twitter talking smack.
Yeah. No, I'm not. But honestly, there's a lot of interest and excitement around learning about some of these new projects, going a little bit deeper, as opposed to when you come into the space, often it's just Bitcoin, and it's easy to kind of start off as a Bitcoin maxi. But then over time, I think people get more curious, they get more engaged, they start looking at different communities, at different use cases. And I think that's healthy. I think it's good for the ecosystem. And I like that we're pioneering that collaboration inside our own corporation.
That's great. All right. So 10% of the total AUM can be allocated to high conviction VC style plays. Mm-hmm. When you say that, are these equity and token, or is it just equity or just token, or how do you break that up?
It's a pretty open option for us. But day one, everything goes into digital assets. We're not holding back fiat. There's no timeline associated with it. It's just an option when we see something that we would be able to execute on it.
And I've heard Sebastian on a different podcast talking about this. So, there's maybe I should have him come on after you maybe. But
he's right over there.
Is he? We'll bring him on. So there's no subsector focus. It's opportunistic. You guys are in the market. You guys are active. You guys have great deal flow, and it's on a case by case basis. There's no set mandate of, okay, we're going to do DPIN or whatever.
No.
Okay. Okay.
No, very much case by case. And yeah, we just, given the people around this project, we get to see a lot of things. We know a lot of founders. It's fun.
Is there a stage you're looking at? I probably not pre-seed and seed. I imagine it'd be a little more mature, or it just doesn't
Why
matter.
do you keep trying to box me in, bud?
I'm trying to find the flows, trying to see.
You're not going to get anything out of me.
All right. Do you guys have a benchmark? Are you guys trying to beat Bitcoin, or is there some other benchmark that you're trying to outperform?
Well, yes, trying to outperform the appreciation of the underlying assets alone.
And on the yield portion, it's staking primarily, but there's also a potential for lending in the future.
Yep.
Can you talk to me about that lending portion?
Look, so this is what Sebastian's spending most of his time on, is looking at the yield generating options. A lot of focus on the Bitcoin side, because staking for Solana and ETH is pretty kind of mainstream and available. Obviously, we've been around the space a long time, so we're analyzing all options, is what I would tell you. I had yield relationships at Hut in 2021. We actually put some Bitcoin to work with Genesis and some with Galaxy. We were the first to do that. Mixed reaction from the market, I would tell you. But the yields at that time I think they were between 4% and 5%, and we were already committed to holding the Bitcoin on balance sheet. So my view, and continues to be my view today, if you're holding the asset, it behooves you to take the opportunity to have that asset go to work for you, which allows you to fund some of the overhead operating costs of the business, which I think is just, it's the right thing to do.
How do you,
as long as you're balancing the risks that you take. So not looking to fall into, not to name names, but any of the traps that led to the last collapse, which was, honestly driven by people chasing outsized yields with counterparties that were not governed appropriately, and then that leverage kind of turning into a house of cards that took a lot of the space down.
Definitely. Yeah. How do you view risk when it comes to this yield portion? Because staking, obviously not very risky. I mean, obviously there is risk involved, but it's very minimal comparatively. And then when it comes to lending, I mean, it really depends on what you're doing. But how do you, what's going to be the process or the, diligence that's going to go into the lending? I know it's still early, but can you talk a little bit about that?
It really starts with the counterparty. Like, the counterparties that we work with have to have the right risk parameters, the right security protections, the right governance, the right tracking. So that's kind of how we start thinking about it.
And in terms of lending in the future, would you ever consider like going on chain and doing DeFi and Morpho and kind of things like that, or really sticking to companies and like traditional regular C corps?
We're looking at everything. Regulatory clarity for that whole world, we still need as a public company that's working with auditors. We can, one of the things you kind of always have to balance in this space is not getting ahead of your auditor's comfort level. So that's part of why market structure is so important. We do need to have codification of some of this so that we can run the proper traps, do the proper governance. But assuming, I believe over time, we're gonna get a lot of maturity quicker now than we've seen historically. And then we're able to look at more opportunities that way.
Yeah, I'm thinking about the on-chain world. Do you think that that's going to be necessary for lots of folks to enter in the future, or do you think that there'll be enough on-ramps with centralized companies, I don't know, Galaxy or whoever, Coinbase, whatever, that will offer these kind of DeFi, Coinbase did their Morpho kind of deal.
Yeah.
How important will on-chain be for traditional companies, or like will it be kind of taken over by traditional companies?
It's hard to say. Traditionals are coming, and we should expect to see more like big TradFi start to move over the next few years as well, which we really haven't seen yet.
Operationally, like does ReserveOne look and act like a fund, or is it more like a company? Like I'm thinking, fund administrator, and there's GPLP. Like is that kind of
We're not a fund, and because we're not active as far as rebalancing the portfolio. It rebalances based on how it's structured on free float with the yield tilt, and then it's just about maximizing the yield generation. Obviously, we'll have the investment committee, but it's more a company than a fund.
I assume all assets are going to be stored in qualified custodians.
That's right. Yeah, we did announce as part of our business combination agreement and press release that we partnered with Coinbase for custody of our secured Bitcoin.
Very cool. Okay. And what type of investors are you targeting? Because there's family office, there's retail, there's corporates and for treasuries and whatnot. What is the ideal, in your opinion, for Reserve One?
There's no ideal investor. I think you need a mix of everything, especially in the early days. In my first few years, retail was the lifeblood. It was kind of 80% of the liquidity. And liquidity begets liquidity, and then larger players can come into the stock and hedge funds, and then eventually you get the long funds. But you kind of have to have everybody at the party. That's the way I think about it.
Now, how do you think about attracting those types of folks that you want to attract? Like, what is the strategy for the megaphone that you're using in order to get these different parties on board?
As I say, we've got a team that's got a track record. As well as at the board level, we've built something that is unique. We're targeting, I would say, from a retail perspective, more of the new to crypto. So really focusing on building a blue chip, governance forward, transparent, professional organization that maybe looks and feels and sounds a little TradFi-y, a little closer, and kind of in embedding education to bring them along the journey. So kind of really acting as a new kind of bridge between TradFi and crypto.
Very cool. Yeah, really quick on that point, your board is insane. It's like Wilbur Ross, John D'Agostino, Gabrielle Abed, Reeve Collins, and Chin-Chu. What was your pitch to them?
They pitched me. It was actually Chin and Reeve that had the initial kind of idea that they wanted to do something. Chin and I have some mutual friends, and so he asked if they knew somebody with public market CEO crypto experience, which is not a long list of people. So I had the opportunity to meet Chin, and we kind of talked through how he was thinking about it, my experience in the space, who else might get excited about an opportunity like this, and then kind of over time, that's how we were born, and that's how kind of the brand and the vision all started to be crafted and built out. CC Capital, which Chin is the founder and CEO of, is our strategic partner in this. So they actually provide shared services to us. So our head office is embedded in their head office. They provide HR, IT, which allows us to keep the FTE count down because we're a small management team, and we intend to stay that way. But we do need the support of those other functions, and so this setup is working really well. Just
to provide context, Chin he was early at BlackRock. I think he was employee number 5 or something like that.
Yeah, employee 5.
Head of global PE.
Yeah.
Gabrielle, I'm blanking on his background.
Gabe was the started mining in Barbados. I always get in either 11 or 12.
Okay, wow.
So
OG. He works with Binance now or something. I forget.
He's the chair.
Okay.
Based in Abu Dhabi. And he was the Barbadian ambassador to the UAE up until a year or two ago, but maintains his residency there and is very active in the ecosystem, has lots of projects on the go, always has, and just a really, really important advocate for the space going back almost to the beginning.
And Reeve is a former CEO and co-founder of Tether.
That's right.
John was I think, president of Coinbase?
No, he's the head of strategy at Coinbase Institutional.
Okay. So incredible, like absolutely insane.
I'm trying to make the Avengers stick because that way I get to be ScarJo.
I like it. I like it. Very good. Very good. What do you see as your primary role at Reserve One? You know, because I joke with my partner, Dan, you know, we run a fund, but I tell him, I'm like, Dan, I'm in sales. Like I sell LPs, I sell founders. I'm just in sales. How do you view your role?
Well, the CEO of a public company, your role is a little bit of everything because you're the ultimate fiduciary, right? So managing risk is a critical part of the job. Marketing, working with investors, telling the story, that's another critical part of the job. And it's kind of a bit bipolar because one's really internally focused and one's really externally focused. And it's important to have a really strong team around you, which I'm super blessed that we do. Our CMO and our chief legal officer are spectacular. So I kind of toggle between everybody depending on what microphone I need to be holding.
Very cool. Okay, so everything goes great. Well, let's give like a 10-year track.
10 years in crypto?
10 years in crypto. I know it's very, very long, but like, where do you see Reserve One? Where could it go, and what could it be doing in a a longer 5-10 year time frame?
Yeah, I think that's one of the most exciting parts of being in a position like this. We have the structure where we can really take it anywhere. And we've got the team that has the ability to do that. So we've built something that we intend to be here for 10 years, 20 years, 30 years, really trying to build one of the dominant players in the space in a new way. So God willing, you and I are still sitting here in 10 years.
Awesome. Very cool. All right. I want to switch it up a bit to kind of more general questions. So, we've seen MNAVs come down on these different DATs, but crypto prices are still, maybe not today, but still pretty healthy and still kind of generally upwards. What do you attribute to that the MNAV kind of decrease here?
I think saturation. Certainly a lot of stuff came to market in a really short period of time. So the ability for more capital to flow into a similar place is constrained. In some cases, it's difficult to understand, the difference. I think I heard this morning there are 300 DATs. I think all but us are passive or are single asset. Some generate yield. Most are passive. All different sizes, scales. I did a panel with Tom Lee last week. He said he quoted that there are 70 ETH DATs alone, which is wild. So I think that's people are just trying to figure out what makes sense for what. What are the differentiators, and then how does this market kind of mature? I think it was a pretty big bang establishment. Obviously, strategy's been around for a long time, but it really wasn't until late spring that all these new entrants kind of appeared, not just in North America, but globally as well. Although Saylor would tell you, because I heard him say it a couple weeks ago, because somebody asked the question, how many of these DATs do we need? And he said, how many banks in the U.S. do we need? Do we need 5,000 banks in the U.S.? But they all serve a purpose. So his view, and hopefully he doesn't mind me quoting his view, but he did say it in public, is that this is just the beginning of an entirely new category, and there's nothing but room for growth. It just needs to mature. So
do you think that single asset DATs need to exist if the token's readily available, we have ETFs and whatnot, do they need to exist, the single asset DATs? Well,
the single asset DATs, versus if you just think about it versus a straight ETF, their relationship with leverage is very different. And so it is a fundamentally different product. And it's really, what are you looking for? An ETF, definitely passive. Very few of them generate yields. They don't have the ability for longer term leverage like a corp does. So it's just a different product.
Do you foresee consolidation in the future with the DAT space? Do you think that the larger DATs are going to eat up the smaller ones, especially if MNAV continues to fluctuate?
Well, look, we've in the space, we do you do expect to see that. We saw consolidation of miners. They kind of have gone like this a little bit with market cycles. So that's probably a natural evolution. I think we've got a number of teams that are new to public markets. Sometimes I wonder if everyone's fully thought through the stomach you have to sit in this chair for an elongated period of time. But it's all going to be about market maturity, and it'll find its natural resting place.
All right. So I think you have an incredible view of kind of the institutional crypto landscape. In your opinion, where are we in that? Are we in like the first inning? Are we in like the third inning? Like in terms of institutional crypto adoption? Like
First.
Yeah. Really?
Really
So
early.
it's like square one.
Really early.
Okay. Interesting. Do you pay attention to macro variables like, rates, liquidity, geopolitics, and things like that pertaining to Reserve One? Or are you just like blinders on, I'm focused on just my number one goal, which is this, I don't care about?
But everything's connected. Like and that's always been true for crypto because crypto's borderless. And so it's like the butterfly effect. And a great example is when China banned Bitcoin mining. That had just a massive, massive impact on mining economics, how the mining industry then moved geographically over the next few years, and then you started to look at how other regulatory regimes started to think about mining and which ones went pro, and then same thing with treasury strategies as we think about a hot conversation that we touched on earlier is the strategic Bitcoin reserve. And, Lummis has a bill out there that is encouraging the government to try to find a way to acquire Bitcoin in a budget neutral way, in addition to what it gets through confiscation. We know there are other nations doing that or looking at that, and I think that's a really important space to watch and think about. There's all kinds of implications, obviously global macroeconomics, but then there's a defense consideration. Like, where do you want to fall in line as far as like standing up a Bitcoin position? How aggressive do you want to be? Like, how does that play into the geopolitical landscape? I think, there's so much to think about and watch. And then we've got, the government shutdown. How's that going to impact clarity, the strategic Bitcoin bill, getting the rest of Genius through, like all of these, everything's interconnected. And I think it's fair to say a number of jurisdictions are kind of watching what the US does. And then they'll kind of mirror or figure out how they want to fall in line after the US kind of sets up this framework. So yeah, you have to watch it.
Do you have thoughts on the dollar's performance this year? It's been pretty abysmal. I think we're like down 14% or whatnot, and gold is absolutely ripping. So like it makes me a bit nervous. I'm like, are we in trouble here? What do you have any thoughts on that?
This de-dollarization trade, they're actually calling it that now. The inflation hedge. That's why gold's ripping. I think Bitcoin is starting to move. It's been interesting at the beginning of the year. I wouldn't have predicted gold to outperform Bitcoin as of October year to date. And it'll be fascinating to see how they end up, full fiscal 25. But I really think this has a lot to do with inflation and geopolitics and people just looking for hedges.
Spooky. Well, we will see. We will see. All right, Jaime, it's time for the closing questions.
Okay.
All right. First one. What is your Bitcoin price prediction? Give us 1 year from today.
I'll make one prediction. I think the cycle breaks.
It's a 4-year cycle.
I think this is the cycle that breaks the 4-year cycle. I've never said that before. I was pretty confident the last one was going to follow the pattern. But the more tea leaves I'm reading and looking at, I think the cycle breaks this time. And with that, it makes Bitcoin price prediction at this stage of the cycle even more difficult. It could easily be over 250.
So to double click on that breaking of the 4-year cycle, is that due to the institutional players coming in and their capital is just so much larger than retail, or what is the thought process there?
Institutional players increased necessity of money printing, so increased inflationary activities. There's pent up demand from digital asset treasury companies that have the capital but haven't yet acquired the underlying assets, and so that there is pent up demand in the system that's been pre-committed and is pretty sizable. The debt trade could fundamentally change the dynamics of the market, because if you think about it, it's supply and demand. And the DATs are arguably permanent capital. It's Bitcoin locked up indefinitely. And they're not going to sell it down for pennies on the dollar. If things get really hairy, in all likelihood, it just rolls up to someone else. But the Bitcoin is preserved in that format. And then you get institutions coming in. I think you get increased activity on the global level. It could get really spicy. Or we could get another fall upset, and I could be completely wrong, and it could be 70 this time next year because we're deep in a bear.
Don't say that, please.
But this is why we're here. The excitement, the vol, you can't predict, because the minute you think you know, you can be assured you don't.
Totally. Is there a belief that you hold today that your younger self would disagree with?
I think I know my younger self thought that everybody I kind of looked up to as I started my career was exponentially smarter. And I don't know how I thought that would happen, because you are who you are and you get more experience, but your intellect is kind of core. That's something I wish I had have known. It probably would have helped me think through things differently, be more confident earlier. Ultimately, we're all just people. We all started at the same place, and you're just at on different levels of experience in the cycle. But outside of the rare super genius, that's something I wish I knew earlier.
I love that. It's so true. Like everyone always says, we're all just people. Except for Elon. He's kind of separate. But yeah, very cool. What do you?
Elon's still a person.
Is he though? We don't know. We need to do some tests.
He's got his Canadian roots. I have to believe his mom's still in Canada.
Okay.
And not in an urban center. She's in rural Canada. There's got to be.
There's something in the water there for sure. Definitely.
Yeah.
So what do you optimize for now that you didn't 5 years ago?
Joy. I think 5 years ago, I was a little bit too focused on getting to the next thing. I was in the habit of rushing and not taking a step back. I actually I tweeted a quote this morning that said one of the most important skills you need to learn is how to be in a good mood for no reason. And I do think I'm broadly a positive person, but I didn't apply intentionality to that. And I think I'm much, much more intentional about making room for balance and making room for joy.
That's awesome. Wow. Very, very cool. Okay. So when did you almost quit? And what kept you in the arena for anything that you've done before?
I can't say I've ever almost quit. I have definitely gone through periods of thinking that I was crazy. I've gone through periods of not sleeping, not eating, kind of just getting through one day at a time and praying, that you're doing the right things. Because in the work that I do, it's really hard. You're going into something that's broken. It's broken for a reason. There are stakeholders that want it fixed as quickly as possible. There are humans involved, employees. It's messy work, and I love it, but I take it very, very much to heart. And those first 6 months they're particularly grueling. But once I start something, quitting isn't an option. It's just not who I am. So it's how to survive and get the job done.
All right, last one. Is there a piece of content, whether it be a book, blog, movie, et cetera, that had a major impact on your life?
It is the Bitcoin Standard. That's the book I make everybody that is new to the space and starting to work with me read. My daughters are 15 and 17 now, and they both asked if they could intern with me. And I said, not until you read the Bitcoin Standard, and then you can come back and maybe you can intern with me. But just really understanding that the Bitcoin Standard is the foundation of everything in this industry, and then it layers on top of that. But I think that's the most important book for people to read that are starting their journey here.
Incredible. Jaime, thank you. This has been awesome. Where can people learn more about Reserve One and connect?
At ReserveOne.com. I have the benefit of a wildly unique name. So it's Jaime Leverton. Jaime is spelled Jaime, because my parents were big fans of the Bionic Woman. And her name was Jamie Summers, and she spelled it Jaime. And my parents didn't run like the language check to realize it was Jem in French and Jaime in Spanish. So it's a confusing name, and Leverton's rare, but that means I get all my handles. So at Jaime Leverton on Twitter, on Telegram, on LinkedIn, and the website's ReserveOne.com.
Thank you so much.
Thanks for having me. It was super fun.
Hey guys, really quick. After Jaime and I were done recording, Sebastian, who's actually the president and CIO of Reserve One, he happened to be walking by, and I was able to chat with him for a few minutes. So we decided to tack on that portion of the episode just at the end here. The conversation was stellar, so please stay tuned. Sebastian, thank you so much for joining me. Just had Jaime on his incredible conversation, and now we're going to chat, luckily. All right, so we were just talking about PayPal and how PayPal has enabled this stablecoin PUSD. And you mentioned that in the past, since September 1st, the AUM of PUSD has doubled.
Yeah.
And that's insane. And then on top of that, you mentioned that there could potentially be issues down the line, maybe in like next few years, with a credit crunch in banks. And can you talk to me about your thesis here?
Sure, absolutely. Great to be here. Okay, so first, just what just happened, right? PayPal, publicly traded company, has had a stablecoin for a while, right? And then what did they do? They turned on an easy way to take your dollar balances and put them into stablecoin. So I did earlier this week. I went from dollars to stablecoin with 2 clicks on my iPhone. And I went from earning nothing to having 4%, right? And then I was just curious, and I thought, well, I wonder what's going on with it's actually PYUSD. It's an odd ticker, but the PayPal USD stablecoin, and yeah, it's gone from 1 billion to 2 billion inside of basically a month. Which I looked at other stablecoins. Obviously, money's coming into markets. You see some growth, but nothing is looking like that, right? So it's clear that they are having a focus on their stablecoin at PayPal, and that I think is a big deal because it also shows you that like corporates are starting to take stablecoins very seriously. So then back to the broader topic, which is like what's happening with money in the U.S. and what could be great about it and what could be somewhat of a challenge down the road. I think for consumers, this is a huge potential upgrade for them, right? You could have a fully reserved narrow bank, which is a stable coin, right? That's there for payments 24/7, regulated, legal. And most shops are going to try to give you 4% rewards, which is broadly in line with like where T-bills are today, okay? Compare that to the legacy banking system, which is open Monday through Friday, basically. And if you miss FedWire, too bad, so sad. And you get paid basically nothing on your interest. So do you want fractional reserve, zero interest, painful to use, or 24/7 fully reserved and actually gives you a better return? It's clear what consumers are going to do. Now, what's missing? Stablecoin acceptance, but that's coming very, very fast. You can see it all over the press. Everyone is trying to build out stablecoin acceptance because now they know what a legal stablecoin is. Okay, so now that's where we are. We're in front of this massive change. What does it mean though from a macro perspective? Well, this is where things could get a little bumpy down the road. Just for the way that the economy moves money and how it creates credit. The good thing about the banking system as it sits is when we deposit our money into a bank, we have a fractional reserve system. And then banks take our money, whether we like it or not, and they lend it out and they create credit in the ecosystem, right? In the economy. And what's unknown is how this transition will potentially affect credit creation in the U.S. I mean, in the end, we'll still likely find ways to get credit to those that need it in the economy. But the transition could be bumpy because right now, if you put your money into USDC or PYUSD or any other stablecoin in the U.S. under the rules that have been set out, you're going to have the assets that are held are cash and T-bills. There's no credit creation there. We're not lending money to local economies through stablecoins. Now that's okay because what we're trying to do is upgrade payments, and that's the right thing to do. I think what the industry is going to have to figure out is how are we going to migrate not just money on chain, but assets on chain. And I think that's why figuring out tokenization, on-chain assets, on-chain securities is really important. We've already got on-chain money coming with stablecoins, and that's amazing. But could that create a macro issue in 2027, or we potentially have a credit crunch if deposits flow out of banks? Yeah, we have to watch for that.
Yeah, I mean, the role of banks, it's got to change, right? You have to imagine they're going to shift in some capacity, or maybe they'll get smaller. Some neobanks or crypto native banks might get bigger. Like, how do you imagine the traditional banking incumbents, like what's going to happen to those big players?
Well, the first thing we know is we don't know, right? But I think when we're looking at investing in the infrastructure, we want to understand the big changes that are occurring and try to understand what might be mispriced in that process. I think one of the things that's most likely mispriced is how fast stablecoins will grow. Right. Our view is that will surprise people over the next few years. So that could be quite bullish for some of the equities involved, both public and private. But then on the tokenization side, I think that's a big question. Like, how is that going to come forward? How are we actually going to migrate securities from off-chain to on-chain? And how will that enable credit creation? Now, what happens with the banks? Look, these banks have built phenomenal customer relationships. They operate, generally speaking, with safety and soundness. They're regulated, and they have the arms to create the credit, so they can still go and get funding, but their funding costs just might go up at worst case. Now, that could create a higher cost of funding for certain businesses down the road, and I think regulators and policymakers are going to have to watch the unintended implications of some of these upgrades. In general, stablecoins should be a big net positive for sure in our view, but you might have some things you have to deal with on the other side as you make that migration.
All right, so at Reserve One, you guys have this 80% allocation to Bitcoin, the 20% allocation to alts, and then you guys also can participate in yield generation, whether it be staking or potentially lending.
Mm-hmm.
Anything that you're talking about today, are there any sort of, do you see potential for Reserve One to participate early on, or is this going to take, it's going to take some maybe months, years for Reserve One to participate in, I don't know, on-chain securities or stablecoin yield or something like that?
We're looking at all of those things today, and we view many of these opportunities that are nascent or new as actually dual opportunities. What I mean by that is we will have a lot of Bitcoin, right, that we will want to deploy. Now, we're speaking to a bunch of different new organizations that are putting together, whether it's a protocol or some sort of new business relationship where we can put our Bitcoin into an economic relationship that would basically put it at risk for some sort of, basically allows to invest the Bitcoin, right? So that enables us to be long Bitcoin and also to potentially generate returns in Bitcoin on our Bitcoin. So, going after the core value proposition of a DAT, which is we think we can compound in crypto better than an ETF. Of course we do, right? But for us, it's a special context because actually I want to be early talking to these folks because we could also be investors via the VC route into these platforms that we like. And so we can kind of play in two different roles where we can put our capital into their network, but also maybe get tokens at the same time. So that is a unique value proposition I think we might have when we think about how we deploy our assets and then get value for people that intend to be invested in our equity, because we can leverage our capital to also become, potentially equity or token partners of that network or platform.
How do you think about minimizing risk here? Because, on the staking side, as mentioned before with Jaime, staking's pretty safe.
Yeah.
The lending side, it depends on what you do. And if you're going to be participating in newer protocols or companies or kind of we're not totally sure yet. So how do you think about risk and how to mitigate that risk?
You have to, first of all, understand all the types of risk you might be taking, right? You have smart contract risk. You have operating risk. You have, in some cases with DeFi, you can have AML KYC questions, right? So there's a variety of different risks that you have to basically analyze first, because if you're not measuring it, you can't seek to mitigate it. There are ways to feel more comfortable with any of these particular dimensions, or remove those risks entirely. But it's I think it's going to take a lot of diligence ultimately for us to feel comfortable to do any one of these things. And one of the ways you mitigate risk is you actually do small size, right? So if we are doing, say, like, let's take an example, hypothetically, we're lending our Bitcoin, right? Maybe we would do 10% in some of these more experimental strategies. And even within the 10%, we break it down across 5 different networks or platforms, right? So that way, if any one particular vendor or platform has an issue, we mitigate it with just sizing, right? And then we have to watch how these guys perform over time. And I think we're going to learn a lot, and we'll be able to cut back in certain areas, size up in other ones as we go.
Would you ever deploy any of your Bitcoin, for example, to like a BTC denominated market neutral fund, or is that kind of like a future step that you might or might not take?
We are fiduciaries, right? In our minds, we have to do what we think is the best risk-adjusted return for the investors in our company. So we will look at everything. We will not do everything, but we will look at everything. But what we want to do is understand the risks that we are taking and how those risks come together in one portfolio. And there may be the case that a market neutral strategy might make sense in some size because it has some sort of it's extracting some sort of inefficiency that's orthogonal or additive to what we're already doing in our book elsewhere. But the bar will be high for strategies that are seeking alpha, because then their bet is that they're right and you're wrong, right? I'd rather understand that we're taking an economic risk or that is slightly different. So for example, if someone just needs liquidity and we don't, well, I can take a liquidity for a year, for example, with some of my Bitcoin, because we intend to have a permanent capital structure, right? So there's types of economic risks that you want to get paid for. There's other ones where maybe you think that the source of return is not persistent.
All right, so the VC bucket, 10% of the AUM can be allocated to early stage, or not early stage, just high conviction VC style opportunities. That is equity and token potentially, or is it just token, or how you?
Great question. So we are a DAT, right? And how are DATs measured on what they hold? And so that means for us, we can do both, but we will have a preference towards tokens over equity.
Is there a stage that you're excited about specifically when you're looking at these VC opportunities? At like early stage, is it mature? What do you specifically want to target?
We're entering a completely new cycle, right? We're entering this first institutional cycle, right, with regulation. And so you go from a more pure VC market where they're making new things and they may or may not play out, to now something needs to scale, right? So I think there's going to be more private equity opportunities over time, because now businesses are going to need growth capital, whereas before they were actually, for the most part, the deal flow is in VC, not in later stage private equity. I think there's going to be more later stage private equity. In fact, I think it was Kraken just did a $500 million deal, and they're also preparing to go public. That's a relatively new phenomenon as compared to what we're used to in crypto.
Yeah, thank you. This is awesome.